Now we're going to stick with that theme, doing business in Russia. And for more, we've got Scott Licamele. He has been tracking foreign investment in Russia and emerging markets for more than a decade. He is director of the appropriately named Red Star Asset Management. He's with us from Stamford, Connecticut this morning. Scott, let me ask you this. Is there reason for optimism here that U.S. companies might gain more access to the Russian market through these talks?
Yes, I think so. I think clearly the results of the summit are that perhaps there's a new geopolitical agenda, and that clearly the announcements that we saw yesterday and over the past months regarding renewed investment in Russia are very good news. Companies such as Pepsi have announced, I think, over $1 billion of investment in Russia planned over the next 3 years. And clearly other companies such as Kraft, Nestle, Unilever, Metro, all these Western companies are very active in the Russian Federation.
Scott, though, how much appeal does Russia hold when you balance the size of the market on the one hand against the obstacles to doing business there?
Well, clearly in any emerging market throughout the BRIC universe, if you will, there are issues regarding transparency, rule of law, etc. But in our opinion, clearly consumer demand, if we're looking specifically within the consumer sector, is so high in these countries that most multinational corporations, in cases specifically in the consumer sector area where they're able to invest in Russia, find it that the potential rewards are so high that it's worth the risk of doing business there.
And Scott, you mentioned the consumer sector. How would you advise oil and gas companies that would want to invest directly in Russia?
Well, unfortunately, the Russian government over the past 7 years has systematically been restricting the ability of foreign direct investors to make substantial equity investments in the extractive industries, in the financial sector, and in a variety of other companies that they deem to be of strategic interest. So unfortunately, there's very limited exposure that companies can gain. There are some companies that are grandfathered in that have exposure, but largely future involvement would be through joint ventures and things of this nature, like pipeline development and things like that.
But Scott, is that becoming a little more predictable, let's say? You wonder, though, what Russia will consider of strategic interest next. Can we be fairly certain, or can companies such as Pepsi, for example, or Metro, be fairly certain that there will be no government involvement in the businesses that they're targeting?
Well, I think that we saw last year, probably early to mid-2008, the Russian government was becoming more and more aggressive in trying to broaden what they deemed or what they could deem as strategic industries, and therefore, prevent or slow down the investment process by Western companies. But I think what's happened now, because the access to global equity and debt capital markets is severely limited for Russian corporates at this point, I think that we'll probably see a relaxation of those restrictions, and you'll probably see some renewed investment in the region. So I'm not so concerned that they're going to be making it more difficult at this point, because simply the cash isn't there because of credit conditions.
Scott, we've only got about 15 seconds, but on balance, do you think it's a good idea for companies to be investing in Russia right now?
Absolutely. And if you look at all of the major corporations that have, particularly in the consumer sector, they're getting double-digit top-line growth from these markets, and as G7 growth begins to or continues to remain weak, clearly the growth that these large corporations such as Kraft and Pepsi, et cetera, they're clearly getting that growth from emerging markets, and Russia is an integral part of that play.
Scott, thank you. Scott Licamele of Red Star Asset Management. I want to thank him for his time this morning.